Hey, good morning, guys. It's Sunday, and I really wanted to go over a quick educational video. This one, and a lot of you guys that have been in the Discord know I pretty much teach this and talk about this on a day-to-day basis. It's the concept of progression on a chart, right? And I like to think about it as like kind of like a miniature war, right? If you storm the beaches of Normandy, right, you end up taking the beach, you move up to the hills, right? You don't want to lose the beach now and get pushed back into the ocean. Once you keep the beach, you want to progressively move forward and then take the hills, right? And then move into the cities. Things like that. And just think about it in terms of like a small miniature war, right? Whatever you take, you don't want to give up. And some of the best progression trades can be made off of gaps, right? I talk about this a lot, especially with earnings. And I really wanted to dive in to Costco's chart right here. This is a picture perfect example where we have an earnings double beat. I'm pretty sure they might have missed on revenue, but still a good opportunity with a great fundamental company. I don't think this gap's going to be there for much longer in terms of the gap sell-off, right? But think about this huge gap down day as kind of like your earnings draw, right? This is a major source of liquidity where there's a lot of orders that were passed in a singular day. So this imbalance is important for the chart to fill eventually. But as you guys can see, we did have a lower gap as well. So this is going to take priority since we're already close to this gap, and this is an imbalance that will want to be filled rather quickly. But the thing is, right, we think about context in terms of, right, what progression would like to be started and held. This breakout here pushed us into this imbalance candle, and then it held here for about 3 days, and then it pulled back, right? We now filled the gap on this first one. Think about it naturally. What would progress be? This should technically turn into a support now, right? So we'd want to see buyers turn this gap that they claimed on this bar here on the 12th as support now. So now it pulls down, and that's why I have this written out. Bulls could turn this into a higher low, right? They now stepped up their bid from the low to this here, right? Should make sense. Pretty easy concept. What would progression be from there? Right? Ideally, you answer this. Push, hold. What do we want? A new high. So we break out here. It's okay if we end up rejecting, but ideally you get a push all the way up towards the gap right here. If it sells off, so be it. What do we want to see hold, right? Top of this higher high. Break out, hold. Break out, hold, right? And that's the concept behind a progression into an imbalance, right? Remember, this is a major imbalance that the chart wants to ultimately fill. This is your liquidity draw, right? So a lot of orders were passed here, so it's going to want to make its way back up through this and then fill the imbalance with due time. Obviously, it takes a little bit of time, and like I said, progression to be made and areas to be filled out with bids, especially, if this was inverse, okay, kind of the same concept here. Colors aren't going to match, but let's say this ended up gapping up, right? You'd want to see it eventually kind of create a lower high off this zone here and then start to progressively make lower highs and then draw back down to the gap here and then fill out, right? And then you would look to go long off this spot again because naturally people are going to start bidding this zone, right? If this is a bullish chart now, you're going to have buyers sitting here, right, to stop the gap. And that's just kind of the concept behind a peg, right? Or if that doesn't hold, right, you'd see them try to hold this, the very, very last portion of this here, okay? So let's go over a few more charts. There's some better examples as well that have played out over time, and you guys will kind of see as well how these areas will, kind of naturally hold over a period of time, and how these liquidity draw candles will actually stay as a major source of support or resistance. So we'll jump into those really quickly. Okay guys, this is Costco again. I promise I'm not delaying this video. I just wanted to let a little bit of time play out so you guys can see what's happening, right? And kind of this in real time, and that progression gap trading is real. And yeah, this is Costco again. Like I said, I took my first clip from this day here, Friday, March 15th. Obviously, I was talking about the fact that it broke through this gap here, and you'd want to see a higher low, pullback, progression held, and then it would mark its way back up through this candle here. I'll give you guys a little bit of sauce, right? I think I've talked about this before, but these, like the next day earnings candles, these are technically imbalanced candles, right? Especially on like bearish gap downs from earnings, people usually just sell at the open and it bypasses all the orders very quickly, right? So it's more than likely going to make its way back up through this candle if it has the opportunity, because once again, it bypassed orders so quickly. right? And this was a really nice indication too because it pushed through this gap and obviously covered what it needed to cover very quickly. But you guys can see, right, if we end up pulling our fibs from the low to the high, it doesn't really matter. You can go high to low or low to high on this one. This push to the equilibrium of this imbalance candle, right at the 0.5. So it's typically not going to push through that, right? There's very rare amounts of times that it will actually travel all the way through this candle in one day, right? Most stocks, if you guys don't know, have an average true range, and they usually fall right in line with that, right? Whether it's 7 points, sometimes it'll move 8, but for the most time, it'll kind of stay within that 7-point range. So this is pretty, expected for this to kind of open here, push to fill that gap, and then stop right at the equilibrium of this imbalance candle. And that's a good sign to like, okay, let's watch for a higher low at this point, right? And what ended up happening, it pulled down, progression was held, it pulled back, created that higher low right off of this gap and kind of showed that buyers are willing to step up their bid, as you guys know, right? We were talking about here, looking for a higher low here, and then a continuation, right? We would look for a continuation. I'm going to delete this now, or a break over this lower high here, and then continuation towards the top of the imbalance candle at 755. I'm not going to update this again, but this just wanted to go back onto Costco and show you guys I wasn't bullshitting. Like, this is a real thing. This is kind of how you should read trades, right? It should be kind of like that, buyer protection, seller protection, and not giving ground, right? And really trying to protect the progress that you made via gaps, right? It's just a very logical thing, and a lot of people think about gaps backwards, right? Like Target, for example. This is another one where buyers want to protect the ground that they made up from here to here, right? I'll just kind of copy and paste this over, right? And a lot of people will see this break into the gap here and they want to short because they're licking their chops, thinking this is, oh my god, this is 165 down to 154. This is just going to fall straight down. It doesn't work like that. Right, and a lot of times you'll see these bait down, right, to gather excess liquidity to push it back up to the top, knowing that, retail will try to short this, thinking it's easy money, when really they're just kind of looking for a counterparty to match buy orders with you trying to sell, right? So, yeah, that's going to be a good one on Costco. I can't wait to see that one play out. I'm looking for my opportunity long now. I probably should have got in back here. I just kind of forgot about it. But let's jump into Google. This was another interesting one that came from a bearish perspective. All right, guys, I switched to black and white. I think this will help you guys see it just a little bit better. But Google is a good example as well, right, where we had the earnings gap down despite the double beat once again. And really, this is kind of a telltale sign that enough shares weren't collected or there's not enough inventory to be able to mark price up. So you'll see an exhaustion occur, and then you'll end up seeing things sell back off for a reaccumulation or a rewash is what I like to call it. And typically it'll fade underneath to like a major pivot, whether that's a weekly swing low or multiple swing lows, and then you'll start to see price make its way back up on low volume, right? Because we have seen that accumulation or that campaign actually occur, right? And they get the shares they need and they'll mark price up again. So where did this end up happening, right? We can always mark out the earnings gap. So it starts right around here, right? Big spot where the gap down, I guess, should be fulfilled at 151.19. And then obviously the gap started here, right? And of course we end up marking down first. We had our liquidity drop off these two candles here after earnings. And then it makes its way up and you guys can see volume is completely dead leading into this gap, right? Very telltale sign of an exhaustion. And what does it do? It begins to sell back down, right? Now as we're selling down, you guys can see it breaks back under. We have a higher low, kind of a lower high here, and this is where we get this really nice formation of this trend line that we had kind of formed out. This is where I do advocate for trend lines, like right around here would probably be the best one, right? And then I'll start to delete some of these because I really want to just talk about progression. It's not so much about the gaps here, but that would be essentially the exhaustion kind of leading into a gap, aka the gap trap. Sells down, lower high, retest the initial gap now. So progress is being lost from bulls, right? And bears are regaining the progression that they made. So we can tie that into at least the progression standpoint of the bearish side, right? You guys can see this is the gap that bears want to protect. Gets halfway through, right? Bulls exhaust. They need to reload and recollect inventory if they're going to push higher again. What does it do? It breaks down. Volume increases. It pushes back up one more time. Volume's low down here, as you guys can see. We reject the gap now, the initial gap. This is a big win for bears, and what do we see the next day? big high volume flush, right? And it's not always just a bad thing. Just bulls may have capitulated to try to get prices lower, and you have sellers jumping in at the same time, and it sells down pretty aggressively, right? Pretty aggressively sells down. What does it tag finally? Tags out, like I said, that big liquidity draw, and we see a 4-bar accumulation. I think this is where it accumulated, right? Because volume starts to kick in and is much higher than any of the sell-off days, but it doesn't really make a low. This is right when I was looking long for it, like I did for Apple. We start to consolidate here at the swing low. It does gap down, and what does it do? Pushes down one more time. Not really a consolidation like we saw here. We just see 2 bars or so right off of this weekly spot down here, right? So here into here, this chart should look a lot more familiar now, right? Because I marked this out, I put it on a weekly scan. So let's go ahead and just make these green so you guys understand these are the weekly lows that I was looking for. It ends up kind of bouncing just before, and look at the volume push here, right? It doesn't need a ton of volume because I think, like I said, they were probably buying in this zone here, right? And then obviously it broke under the swing low, and they probably stopped out people, collected some more inventory. Now it marked up on low volume because they collected inventory, right? They don't need to have a ton of volume since they already have everything they need. Now, let's tie in progression here. I don't want to get too confused, but this is the simplicity of the charts, right? Now, if you think about it, there's not much imbalance on the downside. There's a little small gap over here, but it doesn't really matter that much because we know that there's being a campaign being built here, right? We can obviously understand that they want to fill the imbalances here. There just wasn't enough initial inventory to fill the earnings gap. Now, let's take a look. Let's get rid of all of our lines. We could just make this chart super, super simple. What's the first imbalance that needs to be collected, right? Right? And for a progression for a bullish move, it's here, right? So we kind of found our bottom. This was that consolidated low as well. Remember where I said I think they're kind of accumulating here? Let's take a look at lower time frames. If we jump into the 15, right, we end up kind of breaking through this zone. We pull back, retest, break out again, pull back, retest. Don't you guys think this is a valid area that bulls have protected, right, and now turned into a support? Progress is now claimed. We should see a big expansive move off this, and that's kind of what we do. We start to make our way up each day, right? Now, if we take a look again, let's go to the daily. Where do bears want to protect? We talked about this. This is a big spot. It's still that earnings initial gap here. So if we take a look, right, it's going to tie into this gap, but also just kind of having context of a previous area that bears still want to hold, right? We can now go supply, and we'd be looking for this to kind of reject along with this initial spot here, right? So if you're a bull, you'd want to see, what would you want to see? If anyone can answer this, I can probably just pull this over. You guys can chart it on your own. First answer, and that's in your brain if you're a bull, should be a higher low, right? Where would that higher low come off of? I mean, typically, if you're looking at a daily candle, we see a big, big flush. You can give yourself some grace, right, for this to kind of do something like this. Right, I'll make this black so you guys can see. But that would be your natural progression on a higher time frame, right, where you'd want to see buyers be able to put in a higher low off of this old, gap, right? That would be really good progress to see. Or, I mean, if you guys want to just kind of use simple SR flips, it'd be right around here, right? Those daily highs that were currently rejecting price would want to be now a support here. So you'd look for pretty much the same thing, right? Where you get this push up, you'd want to see it hold here, right? That's a really clean higher low, much higher than this one. And then you'd want to see them break through this bearish progression as well as this gap and do something like this, right? Whether it's right off the line perfectly at the gap or it comes down and holds this gap fill, right? That's beautiful. That's exactly what you want to see. And then, right, what would you want to see from here? You'd want to see a big move towards this, obviously lower high, but take out this spot as well, right? Ultimately, you'd want to see the gap fill. And that is like picture perfect progression, right? And from a bearish standpoint, bears holding areas that they need to, whether it was, obviously the lack of inventory to be able to push this into the gap. This is a mixture of both buyers and sellers jumping in, right? Because buyers obviously don't have enough, so they'll sell and try to regather lower to push it back up. But also, right, the fact that it sells under and it retests a perfect spot here, okay? This is area, like I said, that bears want to hold as progression. It rejects off of this, it sells down, right? We have this consolidation, sells down, Buyers finally are kind of stepping in here and here. They start their markup phase, and then you have really good bullish progression, right, where we have clear break of structures. We have opportunities for buyers to now turn resistance into support. So this is a really good chart. This is a more recent one. And I kind of gave you guys just a little bit of insight. If you guys want to trade Google, I think this is a really valid chart, right? Absolutely valid here, where we're going to see key levels now be turned into support. We'd be eyeing and looking for higher lows. If, like I said, if things get really bad, I mean, the same thing. You'd kind of look for the higher low to be put in here because there's still an opportunity for like a daily structural higher low off of this level. I did show you earlier that the 15s did retest this and kind of turn it into that that higher low. But it remains to be seen. This could be a great spot to go long here. But ultimately, you'd want to see breakdown, higher low, push back out. This level now claimed, and this is the bullish progression, as well as holding this old gap, right? Sellers 100% want to hold this here, right? That's the area that they're looking to hold. If they give that up, right, I think they'd back up now, right? And remember I gave the comparison earlier about war, right? If you're on the beaches and you're getting destroyed, you're going to back up to the hills, right? Where you have a little bit more firepower, you have reinforcements, kind of the same thing. A lot of sellers are going to back up to this final spot here. Same concept, right? So if this breaks out, pulls back, you say, oh shit, we're kind of losing the line here. You cover or whatever it need to do, and then you end up jumping back over here and placing your sell orders or getting ready to short here. And that's kind of what would happen. You'd see a big move out, and then obviously you'd probably have some people step in here kind of through the midpoint. This is a nice lower high, but yeah, that's literally a great example on bullish and bearish progression. I wanted to show Google's chart. Hopefully this makes sense to you guys. I mean, this is I think a little bit more advanced of how you look at it, but if you start to like really just look at structure and gaps and you can solely identify those, it's super helpful, right? And these are set up all the time, especially after earnings, because we do get those big gap up and gap downs. So I recommend going through some charts. I'll go through a few more, see what I can find, but these are the first ones that really stood out to me. We can take a look at a couple more if I can find them. Okay, guys, here's Google. Once again, pretty much untouched, but the only thing I did was I changed the colors here, right? If we talked about this last time, right, we were looking for this to slowly start to trade up to fill the imbalances, right? And then every time we broke through, we were looking for these gaps to then hold as buyer progression. We ended up getting a 2-bar kind of like stall out here, if you will. Still high volume, right, but not indication that we were going to sell off in terms of the candle spread. Meaning like a bearish candle or really anything where we had high volume. But we ended up getting a gap up, right? If you guys remember, I was thinking this can pull back down and hold this like daily support, right? But what ended up happening, right? We ended up pushing up, right? And then what did we end up doing from here? Pretty crazy, right? We ended up going straight to this level here. I marked this out. This was obviously the end result. I was expecting for us to push up and then pull back down and hold this level here, which hasn't happened yet, but I do want to kind of tie into that here in a second. But look, we ended up pushing directly up and filling the final imbalance on Google's chart. As soon as that happened, what do we see? The highest volume, right, which is this nasty shooting star candle, and then we have a 2-bar consolidation here. Now, I don't want to say that this is going to be a sell-off, but this is kind of exactly what we look for, right? We were looking for buyer, obviously the imbalances to be filled to the upside. Now we have imbalances to the downside, but it's interesting that we moved so quickly towards this level here. And the moment we hit it, we have the highest volume of the entire chart, right? Besides the earnings kind of gap down here, right? This is a big sign that this was an accumulation, and it had one goal, right? Was to push all the way back up to the high and fill all the imbalances, and it did so on low volume. That's really important to know. This entire move up, guys, probably caught a lot of people off guard because it moved up on low volume. I talk about this all the time, that when a campaign is established, it doesn't need high volume to continually move it up, right? Because the big players are dictating where price is going. So once they have all the inventory, it can just move on low volume, right? So this was simply moving up on low volume. Major move up towards the high here, fills all the imbalances, and then the major sell-off here. This looks like now, right, this would be seller protection. They got the sells that they wanted and they don't want this to go higher, right? So you'd want to see this level now fade. And it also ties in perfectly because remember, this was the area that I would like to see buyer progression be at. But take a look, right? Now it ties in perfectly into this gap here. Very interesting chart. This is where I would be looking now for sell side, right? So I'd be looking for something like this touch the bottom, right? Remember, the tops and the bottom of these gaps matter, right? So you'd be looking for something like this, push down, touch the top, and then sell down to the bottom right here, right? Maybe look for a buy then again, and obviously you'd want to watch volume at each like a critical level. So if we retest this spot up here, I'd be looking for high volume. As we break down, I'd look for high volume, weak volume, high volume, et cetera, right? You want to have harmonic patterns in terms of where you break down, where you retest, et cetera, et cetera. But yeah, this is another interesting chart. It came in a little bit different fashion than Costco did, and how I was interpreting, and that's fine too. Not everything has to go picture perfect, right? Things don't always reject off of the levels that you perfectly planned out. Maybe they're 30 cents early, maybe like 10 cents early. Maybe they sweep a level and then they close back above. Things aren't always going to be perfect, but another really good chart here on Google in terms of progression and kind of tying into maybe something I can teach you guys later. I know I've taught my Discord kind of about campaign buildouts, right, from big money, whether it's an accumulation or distribution, and how things don't always have to be moving on high volume that people expect, right? And that's why you'll be watching a chart just kind of non-stop move up, like SPY or NVIDIA, and people try to fade that because they're like, oh, this is low volume, this is low, it can't keep going. It can keep going because they accumulated all of 2022, 2023, right? Like you can see these too, and it doesn't have to be like a flat bottom. They can accumulate one range, accumulate another range, which is called reaccumulation if you don't know. And then obviously it can continue moving up with that markup phase. So this is a great chart to kind of keep your eyes on moving forward. I'll just kind of give you guys that free alpha there. But yeah, let's take a look now. I think the other one's Roku. I don't think this one's played out just yet, but we'll check it out. Okay guys, so this is one that hasn't played out yet. This is one that I am watching, and it's set up so perfectly. I don't know why I'm showing this publicly, so do with this what you will. But yeah, this one we've been watching for a little bit now. Starting to form out this rounding bottom. I think this is an accumulation that's forming here. And it's also setting a daily low sweep, right? It's setting up a buy stop rate to actually fill the gap. So there's two opportunities here. I'm here just to teach about progression though. So really, right, if we can just mark this chart up, we'll kind of start fresh. There's a gap way down here, right, from the previous earnings where it ended up melting up. For anybody that might have missed this, it makes a ton of sense why it's pulling back down for a reaccumulation, right, for anybody that might have missed the opportunity here. You guys can see, right, this has pretty much sold off on low volume. No volume really came in at the highs here. This was used primarily to sell back off, right, and then reaccumulate and then probably mark up. Remains to be seen if this gap holds again, but this chart makes a ton of sense why it's doing what it's doing. And now, right, I kind of mentioned that the daily low sweep would be valid. So we have the potential with these daily equal lows for, if anybody that's a big buyer wants to get in and they can't match orders, right, they would just simply put their buy order just slightly below, right around here, or maybe at the gap, and it could take out these daily equal lows pretty easily, right? And they'd be able to match their buy order with people that are getting stopped out, which are sell orders. And if you need to get a big position filled, what better way, right? So you'd probably look for a mark underneath and then a reclaim of that level, right? And then you'd have your markup phase. That's something that I'm watching for. Or for the purpose of this video, right, there's a nice progression build up right here, right? So I missed the entire accumulation phase. Or trying to front run this and get in early, and simply, right, you have this zone here, and it's so easy. I didn't talk about this in the last one, but each one of these little spots should be treated as its own level, right? So you have the gap or the initial gap entry, right, which is that first one, which is this here, and then you have the gap finish or the gap fill. Right? What you would typically look for is some kind of push up, right? Initially, you'd have a rejection off of this level. Some people like to take like a flag that's just underneath this. I like to wait for the actual breach and absorption of it. So you'd get a breach of it, and you'd want to see it pull back into this level and then become a support, right? Just natural, what I like to look for. And then from there, you'd want to see it mark back up. And typically what ends up happening, right, is these sellers, if they get breached, they get absorbed, right? They'll actually back off and then move their sell orders right here, and then passively try to short from this spot. So you'd have to almost like two levels you have to break through, where you'd get something like this, right? Maybe you get a higher low off of this level, but then ideally you get to break through that spot, and then this turns into a support, right? And then you mark back up. Now, this is an interesting one too because we have an earnings gap down, obviously from here. This was Thursday. The morning of was the day that it sold down even more. And really, dude, this candle is our liquidity drop, and it's so simple that it's likely going to trade towards the high, right? This is one singular bar with the highest amount of volume. You know, there's probably still passive orders that are still sitting here. And really, man, if you guys take a look, since this was a Thursday earnings going into a Friday, right, I guarantee a lot of those orders happen in the first 15 minutes or so, a lot of that volume where people probably just sold off, right? So this candle theoretically should be moved through very, very easily, right? And it should draw to the high of this, okay? This is such a simple chart, guys. Like, I don't know how else to put it. First thing though, like naturally, like I said, if you get the progression breakout, there's easy way to trade this. I just kind of marked it out. So you kind of get the push up, hold, push, hold, and then you try to target the highs here. I wouldn't try to go for this in one fell swoop, right? I don't think you would fill the entirety of this gap in one day. I think you'd obviously have to section this out into a swing. But first thing that I would be looking for, right, is there's a clear structure break here where we have this markup, you had the higher low, lower high, and then it sold off, and you have a very clear higher low that got breached that really changed the structure of this chart. Naturally, this level would want to be retested, and then obviously you could look for a short at that point if you'd like. You're going to be inside of a gap, so it does kind of change things a little bit, but that's the first target, right? I wouldn't just be looking for the gap fill itself, right, which is this entire red box. We could just remove that. The chart becomes a lot more simple, right? Super, super easy. Like I said, there is that potential though, and this is where it kind of comes into context, just understanding liquidity buildups, where you could have this sweep under, you look for a reclaim, and this could be its own entry, and that would really help out RR, right? Your risk would just now be a daily close back under this, or you could risk the low here, and then obviously try to target the highs, which would be really nice at 78.61. And then you look for the same schematic, right? You kind of look for a build out, push up, kind of schematic like this, and then a big markup. But yeah, this is a really good chart that hasn't played out yet, that has a really beautiful opportunity for that progression system. And then obviously the liquidity draw would be the post earnings high. I mean, even take a look, guys. If we go take a look on the 15, I guarantee there's nothing there. And yeah, like right off the open, look at all that volume, and it just kind of melted down. No real retests of any levels here, especially that first 15-minute bar. You would want to see a retest of that for some of those orders to fulfill, and obviously, you know, see what happens from there. But it just kind of melted down, small lower high, melted down, small lower high, and then it consolidated, gap down, right? So there's a lot of untested liquidity if there's still orders up here. And, you know, I can probably go here really quickly, take a look at the daily. Right, if we kind of pull it over just so we have this price action here, I mean, yeah, you guys can see there's a lot of that supply is pretty much up here. This entire pocket is here as well. You guys can see too, right, even if I just kind of zoom in a little bit, how we're going to have to kind of clear through this little zone here, which would be the essentially right at the top of this, the bottom of the daily candle draw, right, but also the top of the gap. So super interesting chart here. I think I'm going to be watching this one for, you know, the next coming days or weeks just to kind of see, but really good opportunity for kind of like that progression trade on a earnings gap down. So that's a big one for me to watch. Let's take a look at something that's kind of historical, something that's already happened, and I can kind of show you guys another version of this. Okay, so since Roku hasn't played out just yet, this is the last one I'll show you guys, and this one worked out. I posted this on Twitter once again for free. And I don't know if people took it. I don't really know if it just went into the void and disappeared. But same exact thing, right? Where we have, I'm not going to teach you guys about the NWOG, which is new weekly opening gap, lower low accumulation, or the higher high distribution, right? I'm not going to teach you guys that. But we had it starting here, right? Where we broke this 180. We had the 3 lower low accumulation. Right, and then what we ended up getting was kind of just a low volume. You guys can see it. Dude, it's hard to like, I don't want to show you guys at all, but it happened in this range, right? It started with the 180 breakdown, started in this range. Then what we got is the press out back into this gap here, right? So naturally, sellers, what do they want to do? They want to protect this spot here in terms of bearish progression. But it pushes up, ends up closing underneath. This should have been a candle, and I mentioned this a million times, that should have sold this stock off way deeper. They should have made a new low under here to trade to 165. The fact that it gapped back above, right, and held within the old gap is a really red flag for bears, right? But it's okay, right? They get another opportunity the next day after this close here. This is still not a bullish candle. Volume's pretty low. What happens here? We end up finally breaking under. Oh, wait, no, we close back above, right? Another bear failure, right? So this is getting weird now, especially understanding that there was accumulation here. But now the area that bears need to hold in that, that they want to be able to push this down for a new low at is holding, right? Bulls are now establishing a bid, which is now, right, low, kind of getting a higher low range here. So this is getting murky, right? And what ends up happening a third day, the fourth day, it does break under, but it closes still technically a higher low, right? And then the fifth day, we get another doji inside this gap range, and then we have one final drop, close back above into this gap zone. And I'll make it easier. I probably should have done this, right? Take a look here. This is what the range looks like with like established support resistance levels. You get the break under, close back above, which is insanely, insanely good from the bulls. But once again, another slip up from bears for like 6 days in a row. And finally, this is where I ended up posting things on Twitter. You finally have a bullish progression opportunity, right? Where we get this small gap above, right? Which is above these equal daily highs here, which could have stopped out the bears trying to, prevent this from going over, right? Now, what ends up happening, right, is we're looking for a simple pullback into this zone and buyers to hold, right? It gives the opportunity for bears to get stopped out and close. Secondly, right, as it pulls back into this zone, buyers have an opportunity to build out. Technically, it's a third higher low, but higher, the low, higher low, protect the gap and protect that bullish progression. And then obviously, for those that want to join the party, this is a great entry to, obviously get in at previous highs here as well as the gap. It's just a perfect place to bid at. And this is where I told everyone, hey, I'm going long in this spot. I posted on Twitter, and it couldn't have been better timing, right? This is like literally as I was talking about like the bullish progression thing on Twitter. I was making the video, etc. So it pulled down. I took calls, risking the higher low here, which was simply that. If you guys go back and look at that tweet, that's literally all it was. And then obviously from here, we got a major rally out. And this is now pushing, right, its first real test. Okay, so it filled this little gap here, but this isn't anything crazy. But it's getting its first major test here at 180.17. So we'll end up seeing how this ends up performing here, because this is a lot of supply to try to garner, push through. It's going to take a little bit of time, in my opinion. Obviously, you'd want to see some kind of basing out near potentially this gap or maybe these highs. But this was another great example of bullish progression led by a gap, right? Just a simple breakout, pullback, hold, right? You can see these two visually by different, like I said, tools. If you guys have those, Bookmap's a good one. You guys obviously use level 2. Obviously look at the tape. I don't recommend it on SPY or QQQ. It's a little bit difficult to identify the larger orders. But this is a great thing right here that I wanted you guys to study and kind of go over, because you will see this time and time and time again. And just a little sauce, guys, this chart is completely balanced. There are no imbalances on Apple whatsoever, right? The only thing that's imbalanced now on this chart, it's a very, very small area, is here, right? Has a good date with earnings, in my opinion. So yeah, just definitely something to keep your eyes on with this one. I think Apple will obviously reject 180. If it can break above on the first try, that's freaking insane. But I expect a rejection, and then looking for like a weekly / structurally more sound daily higher low, right? Something kind of in this range. I'm sure the EMAs are still above somewhere. Sorry, I don't have my EMAs on this chart, but I assume they're still above, because this is technically still a downtrend. But yeah, really easy example here that I just wanted to kind of include on this post. If you guys have any questions, as always, feel free to DM me. There's a lot of charts, guys, that have kind of these same exact things, right? Like AMD, right? Just kind of pulled down. Buyers are now protecting this gap here. I doubt it pushes down into this lower gap here, right? So I made a video on this, I think not long ago. Right now, what we're looking for is to, at least me personally, I'm not going to tell anybody what to do, but this is a distributive chart. So once again, this gap was held here, right, from bulls. So what I would expect is a push back up to fill the hourly imbalance and potentially the daily imbalance here. Once those are filled, I would expect another distribution back towards these lows here, right, 165. That's why I'm such a big AMD bear. I've been able to spot this well in advance, but Once again, it's just kind of looking for the imbalances to get filled. Obviously, buyer protect to this one, push back up. This will kind of move on low volume, in my opinion, mainly as a sympathy to a lot of the other semis, which are doing very, very well. And of course, right, we just look for these to act as seller progressions, right? Where now we're looking for this zone to hold. I don't think this one's going to be a big one. We'll just have to obviously read it and take it by ear. But, you know, something like this maybe, where we get this bounce here, maybe a fade. I assume it's going to hold the top of the gap again. Maybe we get a bounce back up. This will hold now the top of the gap, right? Because buyers would want to try to hold this and progress up higher. Maybe we get the hourly. I don't know if this hourly is going to be anything of importance, to be honest. So maybe we just get a big markup through here. And then obviously from here, right, I would expect kind of something like this. Retest that old level. We'd start to kind of trickle down. Right, something like that. That's not going to look like that for sure, right? But this is the next bearish progression chart I'm watching. I did mention Google as well. Google, though, is an interesting one because I do think that this can obviously move higher. But of course, right, this is sell side structure for me, especially after seeing a print come like that off of like a clear objective, which was clearly to sell at this high in this gap. I'd be looking for this to pull down to like 143, right? And then obviously look to go long again back towards those highs. But this is not nearly as broken of a chart, and it's still a very healthy structural chart versus AMD. So AMD still seller progression that I'm looking at to be maintained. But I would obviously like it up here because puts are way more discounted and way better risk reward in terms of me taking it here and then risking an area that I think it's going to go to anyways. So that's going to conclude this, guys. I just wanted to make it super easy. Go through and do your own charts, man. I highly recommend it. People look at gaps wrong. Start looking at them differently. Start looking at them as progress made on charts. And buyers trying to protect them, sellers trying to protect them, and start kind of siding with one side trying to, you know, obviously protect that side. Give yourself some grace, though, because a lot of times you will see market orders push price through, and that's really what creates those wicks. And on a higher time frame, right, or I should say maybe on a lower time frame, it looks like it's just knifing through. But if you actually kind of pull back and look on like a higher time frame of 15, an hourly or a daily, just depending on what your style is, right, a lot of those times those just end up being wicks, and they really pull out the impatient traders and stop them out or create the fuel that's needed to actually move the right way, right? So definitely recommend going through on your own and taking a look at some of these. These are some of my favorite trades to do. And yeah, I mean, that's like the whole concept behind a peg, right? What a peg setup is. Pegs are just way larger in terms of like a gap being protected and trying to really build out that base above where the gap starts, right? But there's a lot more that really kind of fit in and develop narratives of imbalances to trade towards external highs and external lows on a ton of other charts, right? It doesn't just have to be from earnings. So I could go on a rant all day about this. I've tried to make this as simple as I could and just show some very clear-cut charts and some like befores and afters. But yeah, highly recommend. It's all in your guys' own hands, right? This is work that you guys have to do and develop your own edge around it. It's just something that I've found that works and has high probability. And if you're wrong, right, it's pretty objective when you're wrong, and it's an easy stop out in my opinion. So, yeah, take it with however you will. If you guys want to implement it, do so. If you guys don't want to, just move on. Last one I want to add is Microsoft. This is definitely a hindsight chart. I mean, this was happening in real time. There's a couple times I did trade this actually, but obviously we're looking back on it now. I didn't record like a before video, so I apologize. It is what it is. But this is a crazy one in really that there's two different ways you could have approached this because there were bullish and bearish gaps within a range. And it was a really fun chart at the time, right? I guess it really started right here where we have a bear gap, right? So naturally, who's trying to protect this? I'll let you guys answer. That moment of silence was rhetorical. But right, we ended up getting a bearish gap down. We kind of retested that zone, consolidated here. Obviously, we had some sellers that were trying to protect that, and then we sold off, right? Now, what ended up happening, and I knew it at the time, but and I just talked about this in a couple other clips, we pulled down into this draw candle right here, right? This is the day after earnings. This is also a really weird candle because this was FOMC, so a lot of volume tied into this candle here. But we basically drew into the bottom of this candle and got a really nice bounce, and then we gapped up. Where did we gap up to? Right into that imbalance, right? Or that gap where sellers are at. So this is a crazy chart in the sense that we gapped up And for anyone that bought this, you could sell into sell orders, right? So meaning you could have sold your profits of the calls and then flipped short, or sold equity and got both ways of this chart. Now it's super crazy because it's not perfect, right? I mean, technically the fill is up here, but you guys can see, right? It kind of hit this level, sold off, and what did we end up doing, right? We end up pulling down into the bullish progression now of this range, which is here, right? Make this green. Now this is where it gets crazy because it rejects, pulls down to the midpoint. It doesn't technically fill. What do? We push back up. We get a double top and a fake breakout over the top of this gap here, and then a major sell candle that pushes us all the way to the bottom. This is a really good chart, and I wanted to include this because I did mention not long ago about using candle closes, right? How important those are, because look what ends up happening. The candle never closes underneath this gap, right? It literally triggers under, tries to get people, I think, to go short underneath the gap, and then it closes back above. And then what do? We end up pushing up. We reject the top of this gap again here, sell back down, retest this spot for a higher low. So we have the low, higher low, and then a big break towards the top of the gap, right? Then we close above, push up, retest the top of the gap. You guys can see this is fucking crazy, and I'm telling you, the top and the bottom of these gaps matter so much independently. Right, let's just add all these in here really quickly. Where's the other one? Oh, right here. Right, and it's going to get confusing a little bit, but you guys can see, right? Like, top, rejects, pulls down to the midpoint, pushes up, top, rejects, kind of sweeps over the top, sells all the way to the bottom, candles don't close underneath, pushes to the top of the bear gap, rejects, sells down, higher low once again off of this level, right? Pushes up to the top here, kind of breaks through. What does it do? Once it breaks, it makes a new high, sells back down, tests the top of this zone, right? And then doesn't close below at all, right? This is kind of just closes here. This one kind of wicks under, pushes back above, closes, and now it's pushing back for a new potential high. Super crazy chart here. This is a little bit, I guess, I shouldn't say more difficult, because you could choose which way you want to go, right? You don't always have to be bullish or bearish. It doesn't always have to be if this then that. If you see something, you could literally just let this chop around, right, and just wait for the one fill, right? You could have sat here, and this is how I traded it personally, is I only looked at this, right? Initially, I only was waiting for the sell, right? So once we ended up pushing up here, I did take this short. We'll make this red again so you guys can visually see it, right? And then I had here, right? And my risk, right, was this high up here. Okay, super easy. I ended up getting short. What does it do? It pulls down, kind of starts to fill the gap. This is unfortunately where I covered. I was out of the trade because I was like, oh, it didn't hit the bottom. It's good enough. But right, I did note that this would be a good long, but I didn't take it. But it got to the midpoint. It ends up pushing back up. We get the double top, right? This still, even if it pushed up and had this wick, it wouldn't have affected me because my candle or my stop loss was up here at 420.55. Doesn't really jeopardize that, right? And then it pushed down, actually filled the gap. And like I said, like this was a fantastic level. But even if you had just been a bull, right? And let's say you didn't want to be a bear at all, why would you not take this? Right? Bullish progression is held, right? This is a beautiful chart, especially understanding like kind of the context of that a lot of these are now sweeping. It's low volume. There's going to be some market orders or big sellers or big buyers that are going to create these wicks, and it's up to the rest of the guys to kind of push it back up and hold certain levels. And if you're a bull, I mean, this was a really easy chart to read. You had the low, right, pushed up, higher low off the level, and then obviously trying to see if we can push back up and get through this absorbed level, right? The more times we hit a resistance and it starts to sell you off and it doesn't make a really definitive low or break a key support, such as this gap here, this level is getting slowly more and more absorbed, right? Those passive orders are getting eaten out once they found a counterparty. So this breakout here makes a ton of sense. The revisit of that level makes a ton of sense. But I do want to say this looks a lot like AMD's chart. I did mention this in one of my videos in terms of the distribution here, and then obviously the UTAD, in my opinion, pull back down to the bottom of the range. It hasn't hit the bottom yet. The bottom of the range is still technically down here. I'm not going to show you guys my real chart. I have a whole different chart down here. But yeah, Microsoft, I'm thinking this is going to be that breakout. I did mention, I don't know how high it's going to go. There's no real way to tell. But something like that, and then come down, hit the top of the range, break down, bop, bop, come back down here because there is one level that hasn't been filled. And this is very, very minuscule. I don't even know if it has to, right? Because certain levels like these can have like breakaway gaps where they don't have to fill necessarily, just because nobody's going to bid this, right? It's such a small level. There's not much of a range that can be rewashed if they do it. There's not, a point of putting a ton of money down here and bidding this. They would bid bigger levels, right? Like gaps like this or gaps like this. So we'll see if it ends up doing this, but yeah, I just wanted to kind of go over that and tie it in really quickly because the other one that I'll put it in here just in case, but it's the Roku one, hasn't played out yet, so I figured I would toss a few other ones in.